Disclosure, take a read. It is the recap. I'm actually doing a public recap because I'll be out tomorrow for the holiday. Let everyone take a quick look. So let's get to it. My name is Scott Redler, the Chief Strategic Officer at T3Live.com. Welcome to today's recap. So this morning, the title of my note was Headline Risk, and basically that's been the story of the tape. Headline this way, headline that way. Trade's going well, trade's not going well. Economy's doing okay. It's slowing down. No, it's a recession. No, it's just a slowdown. No, it's Goldilocks. No, it's lots of ways, lots of ping pong type action. But the beauty of being an active trader is when you're in key areas, is ways to make money. There's ways to do things. There's ways to have calculated risk, and there's ways to net money and put together a month, a quarter, and that's how you sustain a career. And the real way you sustain a career is knowing when not to trade, not to push it, not to get frustrated, because that's when you lose more money than you have to. So make sure that there are compelling areas for you to put a trade on long or short, and don't overtrade. And if you make some money, don't go back to the well because all of a sudden, you lost what you made in a calculated play by just being bored and pushing the keyboard. So today there was lots of different headlines. So PS, you take a look here at the chart of the S&P cash. There are lots of ways to make money here and lots of ways to lose money. For me, I'm very happy that my strategy that I teach, this red dog reversal, is a very, very good tactic on how to, do a calculated trade and then figure out the points of interest and the battleground spots. So last week, this was your battleground spot, and then all of a sudden it broke below it, giving me a reason to be out of the market. Okay, and I actually got short that day, and then you had downside follow through with a gap here. Then last week, you had this reversal right around that 28.74 pivot, which was this low. Okay, put a low in 28.55, give us a nice reversal, a reason to be long. Okay, I need reasons to be long and reasons to be short. And then the job info, I knew everyone was so worried about a recession. So I was like, all right, if we hit about 125,000 or 135, probably get some follow through. And then that was Friday. Then luckily, you look even closer, another little red dog reversal. What's that? Well, it pushed above 29.52, okay, or 29.53, I'm sorry. Made a high of 29.59, couldn't hold above it. So if you were long during this move, that gave you a way to sell, get flat. Or guys who covered in the hole here said, hey, you know what, we just bounced back 60, 70, 80 handles. I'm going to short it again. So today I wasn't sure. I'm like, hey, if this is any good, if we're going to see commitment to this recent move, if we're going to tighten this range, we probably hold somewhere around Friday's low, which was 29.18. We took that out, early in the morning, just because that's what the algos like to do. They like to stop everyone out, make it go a little further. And then it seemed like we were going to bounce, and I think some guys got a little long. But then, boom, the China, the visas, this, that, all of a sudden you had a big sell program. Most guys that were intraday long got stopped out. That was the right thing to do, even though it was painful. Better to get stopped out at the lows of the day than be in harm's way of more downside. Because if you look at the chart now, when you have a reversal into a potent down day, okay, this does not give me a clue. Hey, I'm just going to buy it. Anything could happen. All right, and at this point, you look at this range, and as you look a little further out, once this gets a little noisy, we're going to be into this key area again. And the more times you get into a key area, the harder it is to hold. It's like you're picking away at a wall, and once you get through it, sometimes you don't come back, above it. And if this were to give way, you have 28.22, and then this is all the way back to the June lows. I'm not saying it's going to happen. I'm just saying you can't just blindly buy, because you can get blown out of the water. Remember what happened last year, this time? Remember this beautiful trend that we were trading, And then all of a sudden, we broke below the 8 and 21 day, which my rule says if you break below and stay below the 8 and 21 day, you get out. This trend was fantastic. We were long 10, 12, 14 names, trading at tier size, playing breakouts, in portfolio approach. And that changed right here. And you could have taken a little loss on these 2 days, but much better than getting stubborn and getting puked out into this move, and then you had the bounce back into then that move. So here we are over here. I'm not saying it's going to happen, but I'm saying anything could happen, especially with the way these headlines are coming in with the tape, etc., etc. And now you have a pro gap here, okay, that usually dictates price, and we'll see if we stay below it. Here you had a pro gap. You had your reversal, and then we filled it so that took some of the pressure of the downside off before this little reversal bar. Now, the bears are in control. We'll see what happens tomorrow. This is 28.92. Hey, Maybe we get a nice red dog reversal trade. Maybe it pushes below 28.92, holds again. Or maybe it doesn't. At this point, though, again, you're below all these moving averages. We are in a very, very vulnerable tape. And most stocks out there are all below the 8 and 21 day, the 50 day, some even the 200 day, especially the go-to tech names that we all love. So let's get to some of them. Amazon, very, very broken. At this point, I am not in Amazon. Looks a lot more like a head and shoulders top, left shoulder head, below all the moving averages. Today, I said look at 1720. It held it for a little while, then closed on lows, and now we'll see what happens here, into this area tomorrow if it sees it. At this point, though, closed on the dead lows, and we're only in these type of momentum names when they're above the 821 day. We don't sit in them when they're below because anything can happen. And it actually broke below this on the earnings. It hasn't really been above it since. And this first move was 100 plus points. This next move here was from 1825. Now we're around 1700, so 125 points once it gave way. So there are definitely ways to be out of the way or ways to be in them when they're working. And right now, they're very, very vulnerable. Facebook also vulnerable. Why? Well, remember this breakout failure here? Okay, broke above 191, was looking good, and then confirmed the weakness by getting below the 821 day there. And now it's a whole lot of nothing. Looks like it's breaking below this 178, has room back to the lows. Maybe tomorrow you get a little red dog reversal around that area if it wants to hold, but you cannot be in that. Just hoping. We don't hope in this business. Okay, we trade tactically and we trade when there's edge. And right now this is saying, the edge is for the shorts or for the sellers. Right here, that's when it changed, and that's when it confirmed the change. Google, it tried to be best in breed, and it too, what's it called? Give you a little topping tail here, okay? And then today I had a gap down, went below 1204. Remember I said if it gets below 1204, get out of the way. That'll confirm a little bit of this topping tail. Well, now it closed in the lows, giving you no reason to be in it. If you had been in Google for 10 years or 5 years, whatever, fine. But if you trade actively from a momentum standpoint, there's no reason to be in this. Little reversal after a nice 3-day bounce, and it can go into this spot. This is what we call no man's land. Maybe tomorrow there's a little bounce, so write down 1189 because it broke this area. So what do we know for tomorrow? 1189. You open above 1189, you see if it holds. If it opens below it, stay away unless it reclaims it. That's the way, you keep yourself safe, and that's what's been working here. There's 1189. Okay, remember that all we knew here was 1172 after these 2 big down days. Well, it reclaimed it. Well, now 1189, you'll see what happens here. But at this point, nothing overnight. If you're shorted overnight, okay, makes a little bit more sense. But for me, I'm just not going to be shorted overnight. There's no reason. Actually, there's a little reason. Netflix, it's been broken since last quarter's earnings. Finally, you had a little bit of a reflex move up. But again, it's a broken bounce. So earnings are next week. I wouldn't be doing anything except for a day trade. Sometimes when it's been red, it's gone green. When it's been green, it's gone red. Little cash flow trades, but that's it. And now we'll see what happens here. Seems like you have a bit of an ascending channel here. And if it wants to break this, I would be very careful. That could mean bounces over. You saw some broken bounces in some of the cloud software names, and they looked okay. I remember yesterday, everyone's like, oh, should I take a little TTD? It didn't go down yesterday, or a little Twilio, or a little this, a little that. I'm like, if you trade them, you have a thesis, yes. They can go up a little bit more, but they are far from special, so they're always vulnerable, even if they seem like they're rising on low volume. What do I mean? Well, here, look at Twilio. Twilio broke here. Remember this bar, this wide range bar said, it's over, get away, or it's not special. I call things special when you could sit in them. Well, this bar said no. This little bear flag below confirmed it. Came in, bounced off big support, broke it again. Then you did have a little bit of a reflex move off the lows, a little bit of an oversold bounce. And now today, big wide range bar, and says game over on that. Team also seemed like, okay, nice little area. I said, hey, use this as a stop if you bought a little bit of an oversold bounce. Remember this little lower pivot holding support? Well, this bar, boom, that was your stop, and hopefully you sold some strength. And my day count rule, I'm always telling you to sell into day 3. You buy day 1, maybe you add day 2 if it's acting well and if the setup's conducive, and then you're selling if day 2 is strong at the end of the day if you added lower, and then day 3 you're reducing and maybe you're trailing a little bit. And if you did that, you did just fine here. Now it's just now it could break this if it really wanted to. TTD, broken. When did it break? This one, it broke all those moving averages. So tomorrow, see if it holds this. Otherwise, it could be some trouble. I did get suckered back into Roku. It's one of my few longs. I don't know why. It was looking at me all day long. This is also a broken bounce. This was your outside day, get out of dodge, get short. This was your downside follow through below the moving averages. Here was your stereotypical bear flag. You could get any textbook or textbook bear flag. Here there was news it broke below it, and then this is where we are now. So I was kind of thinking that there was a little volume there. There's a buyer there. Maybe it gets upgraded. Maybe they know something. If not, it could fail fast. Let's just hope there's not a big downgrade and it's down $10. But otherwise, it seems as if it gets above this 110.50, you could see a little bit more of a bounce if it wants to. But again, it's a different type of stock. When it was in here, you could be long a lot above the 8-day as it's trending. Here below the moving averages, it's trying to repair, but it's vulnerable. Apple, very wishy-washy today. All I said is watch yesterday's low. That is your point of control. Above it, maybe try and be long. Below it, get out of the way because anything could happen. Maybe get short. Some people are thinking that if China wants to really retaliate, they ban Apple products, and if that happened, that's going to get smoked. Not saying it's going to happen, but I think that's why at the end of the day, people are like, I shouldn't be an Apple, even though it's acting best. Maybe something happens retaliatory for that. And so Apple now closed below 225.84. So this now is meaningless. This was that low, right? What was that? 225.84. That's why we came up with it. It pushed into it, broke below, closing the lows of the day. So short-term active basis, it looks more like a not long or maybe short. But if they don't retaliate, and the futures are up, Apple will probably be one of the first ones up because it's been strongest. Now tomorrow we'll see how does it handle this gap. I'm not going to be trading much because it's Yom Kippur, but for you guys, this is that area. And I think that's basically the gist of it. I'm not going to get into everything. Just most names are broken. Okay, they're far from special. Some have been a little fine, like Apple's tried to be fine. Microsoft, tried to be fine, but it broke this little inside range. So even the upgrade couldn't keep it up. So this also actively doesn't look like a sit. It looks like just a trade because they could see lower. And the market is vulnerable, in my humble opinion, to the headlines, to just the way the charts are set up. There's things to do, long with little red dog reversals with a little follow through. Thank goodness we had a few of them that actually had follow through this past week or two. We remember August. That was a sugar honey iced tea show where we'd close strong, gap down, close weak, gap up at least in the last week. We reversed down, you had downside follow through, reversed up, you had upside follow through, then you had a little failure to get out and get flexible. So there's been a little bit more of a continuity type trade. And at this point, still, we have a huge range that hasn't been resolved. And who knows, maybe we stay in the range. But if we don't, you have to be very, very careful, considering that most stocks are telling me that we are vulnerable. I'm scratching my head looking at all these friggin' numbers and economic data saying we're at, 10-year lows and the market's, 4% of 11-year highs. So there's some kind of disconnect and something could happen fast if it wants to. But it hasn't yet. So we'll see if it does. But that's why we're tactical. If you have a 529 plan, your kid's 8 or 9 or 10, don't worry about it. Maybe the next few years, if we do get hit hard, it'll help your average cost. If you have a 401k and you're 30, 40, 50, that too does not matter. It's all about your time frame. Your time frame matters. Okay, don't stray from your plan long term. If you think volatility is coming, that'll help your average price. But if you trade for a living and you trade for P&L and it matters where your number is come the 30th of the month or the 31st, you have to know exactly what's happening, why it's happening, what the buzzwords are, where the levels are, where the points of influence are, where the action areas are, what your tier size is, where your stops are, and whether or not it's worth it for you to put that trade on or not. And hopefully I've taught you a lot of those different types of tactics. And again, you're allowed to sit on your hands with low gross, low net if you're getting whipped around, because cash is a position. And with all that said, if you're fasting, have a good one. I will be fasting. I might have a tiny little bit of a note tomorrow just to see where the futures are, just to give you guys a quick little heads up on some levels. And I will be back Thursday full force. Have a good night and happy holidays.